Hello everyone, welcome to Amuda Academy. So today we are going to learn basic entries in the issue of shares. So what it is? Issue of shares at par. So issue of shares at premium and also discount. So what do you mean by par? So let us read this question. Jupiter Company Limited issued 35,000 equity shares of rupees 10 each. So this 10 rupees is called face value. So remember this 10 rupees is called face value. So now the face value is 10 rupees, correct? If the company issued at the same price, that is 10 rupees, it is called par, right? So now, if the face value is 10 rupees, company issued at 12 rupees. So this is called premium. The remaining extra 2 rupees is premium, right? Next. So if the face value is 10 rupees and issued price is only 9 rupees, this is called discount, right? So this is practically not possible right now. Issuing at discount is not possible. This is possible only in case of reissue, only in case of reissue. This we will learn later. So we can issue at par and we can issue at premium. Normally, we cannot issue at discount. We can issue this in discount only in case of reissue only. So, right. So, let us practically solve a problem and understand these things. So, in this video, we are going to learn only par. So, that is, we are going to journalize for only par. In the next video, we will learn premium journal entries also. So let us start with a problem. Now, in this problem, they have given premium to payable, but we are not considering this premium in the question, right? Let us start. Okay. So before starting, we need to understand the modern rules. So what is modern rules? In modern rules, if asset increases, we need to debit. If asset decreases, we need to credit. So in basics only, I have taught this. So still I am recalling it. Okay. If liability increases, we need to credit. If liability decreases, we need to debit it. So if capital increases same as the liability, we need to credit it. So if capital decreases as usual, debit. Right. You need to make a note on this. This is very, very, very important in this chapter. So let us solve the question without premium. So that is par. So we are solving question on par. Right. So kindly note it down. Now we'll make a column. We'll make a column. Okay. I think this is enough. So this is debit side and this is credit side. Okay. Okay. So let us see the question first. So Jupiter Company Limited issued 35,000 equity shares at 10 each. They have issued 35,000 shares at 10 rupees. So which on application we need to pay 3 rupees. On allotment we need to pay they have mentioned it as 5 rupees including premium. Premium is 2 rupees. We need to minus it. So just 3. We are doing par question. So we are not considering this 2 rupees. Okay. So on allotment 3 rupees. And first and final call will be so out of 10 rupees, 3 on allotment, 3 on application. So remaining is 4 rupees. Right. So we need to receive, the company need to receive 4 rupees on first and final call. Okay, let us solve the question. So I'll ask a thing. So just answer me. So if a company is issuing shares, let us say they have issued 35,000 shares. So people may apply for 40,000 also, or people may apply for 30,000 also, right? So company doesn't have any control over it, any control over it. After receiving the application money, after receiving the application money, then only the company will know how much shares we need to allot, how much shares we need to allot, right? So what will happen if application money comes to the bank account only, then only the company will know how much we need to allot and how much, for how much shares we have received money, correct? So then the bank entry will be the first entry, right? So bank is an asset for us. So if asset increasing, we need to debit it. So bank account automatically getting debited. So did you understand why bank account is getting debited? Yes. So for 35,000, they have issued 35,000, right? Yes. So into how much? On application, how much we need to receive? On application, the company needs to receive 3 rupees per share, which means 3 rupees per share, correct? 35,000 shares into 3. So which means 1,05,000 company will receive in bank account. So now we are, or the company is receiving money for shares. So the shares, the whatever money we have received on application, that will be a liability until we allot the shares, correct? So let us see, you bought 1,000 rupees from your friend. So you said you will give your phone for 1,000 rupees, correct? He gave money, but you still didn't give the phone. So which means you owe 1,000 rupees for your friend, which is a liability for you. It is a kind of a loan for you. So liability, right? Okay. So the application money, whatever we have received, that will be an liability for us. Correct. So now application. So always if we are writing on credit side, we need to use two. Two, equity share application. Now one thing more. If question specifies it as equity share, you need to use equity share application account only. If question specifies only shares, you can use shares. So whatever question gives, that only you need to use and write full form in examinations. So equity, let me make it. Yeah. So equity share application account, you need to write it full in the examination and in your copy also. 1,05,000. Right. Next. Whatever money we have received through application. So for what we have received. So it as a we have received as a capital, correct, from shareholders, from public. So if it is receiving as a capital, we need to transfer the money to capital account, right? So from where we will transfer? From equity share application money to share capital, right? Now, if and why it is got credited, that I didn't told, no. Liability increasing, correct? Liability increasing. So that's why we are crediting it. I already told it. Yeah. Now, if liability, if we are transferring from equity to share capital, then automatically application liability will reduce. If it is reducing, if liability is reducing, we will debit it. Correct. So, equity, share, application, account, debit. Correct. Two, if capital is increasing, what is the entry for that? So it will get credited, correct? It will get credited. Equity, share, capital, account. For how much? 1,05,000, whatever we have received for application. The first entry is done. Correct. Now we need to do allotment entry. We need to do allotment entry. So first, at the time of receiving the application, we don't know how much for how much shares we are gonna receive. So that's why we did bank entry first. Now we know how much shares for how much we have received, for how much shares we have received, and how much we need to allot. Correct. So first we will make due entry, then we will make receiving entry. Right. So if we are making it due, if we are making it due, it will be receivable for us. Is it right? So it is receivable. So receivable increases, correct? So what is receivable for us? It is asset. It is asset. So asset will increase. For allotment, it is an asset. If we make it due, it will be an asset. So asset increasing, equity share allotment account debit. Why we are making allotment on debit side? Because asset is increasing, receivable is increasing. For how much? Same 35,000 into what is the amount for application? We need to receive 3 rupees on allotment. 3 rupees on allotment. Right. So same 1 lakh 5,000. Now, what we need to credit? The same amount will get credited for share capital, correct? So we will transfer the allotment amount to share capital. So if capital increases, we will credit it. If capital increases, we will credit it. Equity share capital account 1 lakh 5,000. Right. Now we made it due entry. We made due. Now we need to receive it. Correct. We need to receive it. Where we will receive? In bank account. Bank account will increase. Asset increases. Correct. If asset increases, bank account will get debited. How much we will receive? 1 lakh 5,000 we will receive. Right. Now, two 2 same as the above. Equity share allotment. Here we have written application. Now we are writing allotment. Just name change. So for how much? 1 lakh 5,000. So why it is getting credited? I already told that if we are making receivable and it is an asset for us, now, if we receive, asset will reduce, correct? So, if asset decreases, we need to credit it, correct? Did you understand this? First, it was due. So it was receivable. So asset was increasing. Now we have received it in the bank account. Automatically receivable will go down. It will get reduced. Correct. So it is credit. So did you understand this? Yes. So let us finish the last entry. Last entry is the same as above. Same as above, just name change. Concept and everything same, entry and all, just name change. So let us see that now. So application done. Right. Application done, allotment done, first and final call entry is pending. So first and final call entry will be same as allotment, just name change. Right. So along with me, write it down. Share, equity share, first and final call account debit. Here we have written equity share allotment at the time of allotment. Now it is first and final call. We are writing first and final call. That's it. For how much? 35,000 into how much we need to receive on first call? That is 4 rupees. We need to receive. Correct. into 4, 1,40,000. Right. 2. What is the entry here? We will transfer it to share capital account. Now, equity share capital account 1,40,000. Now, then we will receive same bank account will get increase. Bank account is debit for how much? 1,40,000. Simple. 2. What is there into 2 equity share allotment? Here, just name change. Equity share first and final call account 1,40,000. So, with this, we are ending up. So, I hope you understood everything which I taught. So, kindly note it down. Kindly note it down clearly and note down the modern rules and also question. Pause and note it down. Yes. So we are ending this video. So thank you for watching. We'll meet in the next video. Don't forget to subscribe. Thank you.